In this episode, I wanted to take a deep dive into stock analysis. In other words, how you decide which company you're going to invest in and how you go about doing it. My approach to picking a company that I want to invest in begins with an overall theme. Peter Lynch, a famous investment advisor, always recommended people start with what they know. When it comes to investing in what you know, I also suggest investing in what you like. You want to be able to be excited about following the stock of the company that you're invested in. You don't want to be bored by the subject matter because you are going to have to do some follow-up to make sure it's doing what you want it to do and that your thesis isn't broken. When I develop an investing thesis, I have 3 different bullet points, and I try to keep it simple, stupid. In other words, I don't want to make too complicated an investing thesis. Now, when Peter Lynch said invest in what you know, it's important to remember that that was just the starting point. In other words, if you really like a company and then you do the research on the stock and find out that it's not a good stock, you shouldn't invest in that company. An example of this is Under Armour. You can really like Under Armour's products. However, the best in breed when it comes to that space is Nike, ticker symbol NKE. Under Armour always underperforms and Nike always outperforms. If there's a best in breed in the space that consistently performs, that's the one I back. It is fine if you want to look at the balance sheet and figure out all the different fundamentals that are going on. There are probably also hundreds of thousands of other investors combing through the financial data trying to find something. So do you really think you're going to find something that everyone else missed and that's not priced into the stock? It's like thinking because I used to play hockey when I was a teenager that I can suddenly just go into the NHL and play at their league. Even though I'm pretty good at accounting, the chances that I'm going to find something that everybody else in the market missed are slim to none. For me, it's more important to ask myself a number of questions. Does the company I want to invest in have excellent management? How's the company's track record? Does it regularly outperform the estimates when it comes to earnings reports? Does the company regularly produce the best services and products that are available in the sector? And does it regularly innovate? Additionally, when I'm thinking about a company to invest in, I like to think about what the potential pitfalls are. If you're talking about a stock like Tesla or Nvidia, you're looking at stocks that have incredibly powerful CEOs. In Nvidia's case, Jensen Huang is the brains behind the company. If he suddenly got hit by a bus, that would invalidate my investing thesis because he's a big part of leading Nvidia into the future. And the same applies with Tesla and Elon Musk. All in all, one of the great things about investing is that it's really personal and it's your own creativity that determines how you put your portfolio together. If you want to spend hours combing through the financial data and looking at 10Qs and 10Ks for earnings reports data and figuring out whether or not the stock works, that's great. You do you. But for me, when it comes to picking an investment, I'm looking at the long term of more than 20 years, and I want to pick a stock that will regularly perform well with great management, great company, and great products and services. After I pick the company, I have my thesis in place so I know what I'm going to do if I need to get out. That's when I sit down and I do a buying plan, and I approach it very cautiously. To learn more, check out my website, getirk.com, which is always 100% free. Please hit like and subscribe, and I'll see you in the next video.